A quick look, of course, along with the start of the shareholders meeting, we do get results out of Berkshire Hathaway, with stock closed at an all-time high yesterday. We'll get you up to speed on those numbers. Coming into the meeting, we were looking for a handful of things. The stock, of course, sitting at an all-time high. The B shares up nearly 20% this year. The earnings this morning are showing a bigger drop in operating results than perhaps expected. There was a pretty significant drop in insurance underwriting earnings year over year, and the surge in the value of the Japanese yen led to foreign exchange losses. That's kind of a mark-to-market thing. Also, the equity portfolio did take a $5 billion also accounting loss. It's not really relevant because it just says stocks were down as of March 31st on a year-to-date basis. Yeah. Now, overall, the headline is that earnings did come in well below expectations. I would say kind of a steady as she goes in the operating businesses, along with that slight decline in insurance underwriting. In the release, Berkshire said our periodic operating results may be affected by the impact of ongoing macroeconomic and geopolitical events. The release also said the pace of changes in these events, including international trade policies and tariffs, has accelerated in 2020.
And I have to say, that is the question that I received most from shareholders who have been writing in, hoping to get questions in front of Warren Buffett, Ajit Jain, and Greg Abel for this. That tariffs was front and center.
I can imagine he's
more
going to be
questions
prompted
on that than anything else.
Yeah. It's certainly the biggest swing factor that's shown up in the last several weeks that could impact them. Also notable, Berkshire did not list the value of its 5 largest holdings as of March 31st. Of course, they listed the stocks. They are the same top
same five top stocks.
American Express, Apple, Bank of America, etc. However, didn't change. It would appear there's no material change in the amounts in terms of buying or selling.
One thing that is notable that we've been watching is just that cash hoard.
Absolutely.
Did he put any of that money to work before March 31st? And the answer is no. That cash hoard actually grew. If you're looking at the numbers, at the end of 2024, it was $334.2 billion. Now, at the end of the first quarter, it's $347.7 billion. And that's substantial. I mean, it's a small buildup from where we were at the end of the fourth quarter, but it is a substantial buildup from where we were just a couple of years ago at the end of 2023.
Absolutely. Just, look, it's coming in the door every day, and it'll pile up if you don't do something with it, right? Yeah. All the dividends, all the T-bill interest, everything else that's coming in. So clearly that story's going to remain. The question of, is it a market call or is it simply the lack of compelling huge opportunity?
Now, the one interesting thing is the market really got volatile in April after the close of the quarter.
Absolutely.
So we don't know if he was putting money to work in the month of April when the market was really volatile with some of these things coming through. One interesting statistic, and I got this off of AI, looking through some of these things, the cash hoard that Berkshire has is now greater than the cash that 4 big tech companies have: Apple, Microsoft, Google, and Amazon combined. Yeah. You always think of those big tech companies as having so much cash, not knowing what to do with it. Well, Berkshire's got more than those 4.
Well, they're using it to build data centers. Yeah. They also buy back a lot of stock. Actually notable, Berkshire Hathaway did not buy back any shares in the latest quarter, which is not too much of a surprise because Buffett kind of lays out the parameters under which he'll repurchase stock. It has to be at a certain valuation. And the stock is trading rich right now, as we was talking about yesterday, about 1.8 times book value at last report.